Hello, welcome back to Core Finance. I'm Matt Brown, joined by Eddie Tofpik, Head of FX at ADMISI, and we're going to look at three currency pairs today, starting off with the Brazilian, US dollar versus the real. Yeah. Talk us through this. It's an interesting move there.
Right,
we've had the 320.
Going back a little bit, reverse head and shoulders,
yep.
Nice move up, double top, X below the market should be the target for that, ultimately, maybe a little bit less than that. It's now approaching the long moving average, which is at 318.83.
Yep.
And then yesterday, we had a key reversal up. A higher high, a lower low, and above. It should be two closes. It's done something like about 4, I think, in that case, or 5. So what's going on? This is an interesting signal. It could potentially be that this neckline action, which is just underneath the long moving average, and the neckline's round about the, I'd say probably just underneath 317.90. So say around that sort of area. That's maybe now influencing this market along with the long moving average, and it's turned it around. And it could be that this whole double top action that we've seen the whole of November is the exaggeration of the reverse head and shoulders, come back to test the neckline, and then make a further move on the upside. If that's the case, X3, which is up there around about 341, that comes into play again. I was almost going to take that off. I say, oh, that's done. You know, it's not going to be that. But I've left it up there. X2 got filled. That was right about the 330 area on the move up from the original head and shoulders. But if that's the case, then X3 may come in play again. This is really, really interesting purely because of the action of yesterday. We are approaching long moving average. We're coming down to the neckline, and suddenly the market says, no. And we're going to go higher. At the moment, it looks like we could see higher markets today.
One to look out for in the short term, very exciting. And in the same region, South America, let's have a look at the Mexican.
Now, I've been well documented saying that if you want to see what's going, if you want to see a catalyst, or not catalyst, but an indicator of what the US economy is about, how the world or anybody sees the current US administration. And I was just saying the president, saying the whole US administration.
Don't look at tweets. Don't from a chart.
Dollar index, yes, that's fine. But the dollar Mexican's probably the best indicator of how to look at, and at least for the last year it's been. It may be starting to wane now. But it's still worth looking at. We've had movements which are very bearish from mid-October till about a week or so ago. We've had a double top, we've had key reversals down. We had a weekly key reversal down 2 weeks ago. So we should have had a nice move down last week, which we did. And then what happens? We come down to long moving average. That's trading around 1847, just underneath that. And it starts slowing down and stopping and hesitating. Then we have also the 50% fib at 1840.66. That's not far away. And a very rapidly rising medium moving average, 1826.49, which is moving higher as well. All those are converging to act as support for this particular dollar move. And it's coincidental that particularly now, when we've seen in the last few weeks, you know, the tax thing, is it not, is it on, it's on. Now, they're not too sure whether this actually is reflecting that. This market is reflecting a little bit of uncertainty about the negativeness of the dollar. And it could be that this could see the beginning of some further positiveness, or at least a hesitation before we try anything weaker. So that's a good indicator of what's going on in the market. And there's a lot of support underneath it at the moment, and I can understand why it's holding there. But whether it will carry on lower or reverse up, that's something just to watch out for. But it'll be quite a big move, I think, when it has.
Good stuff. One to look out for. Very exciting, certainly with the US economy
at
the moment. And finally, the Indian rupee. Looks quite busy. Looks quite busy.
Very busy.
To break it down.
Very busy. The two pitchforks there, the Andrews one, which is the very steep one pointing down, and the shallow one, which is the shift pitchfork. The shift is actually working quite well. It was the low of the market yesterday. Today we've seen the market move back up above the medium moving average, where it had two closes underneath. That's usually a negative sign. Let's try lower.
It's got to have above it, hasn't it?
Exactly. And there's a whole load of supply above the market which could push it further down. But it doesn't seem to want to try down to the August levels at the moment. So it's pulling back up again. It's still very, very bearish, but it's all getting congested together. Everything's coming in and then narrowing
converging on the moving averages.
So so this is actually a chance where the market should have tried lower, but it doesn't want to do it on the first effort. One to watch to see if we get, say, above 65.08. which is the 50% fib, then we're back in, to be honest, neutral territory. Maybe slightly bearish because the downtrend is way up there over 65, 80. But if we stay where we are and below that level, then the opportunity is for a further test down and a move down to 64 and maybe even sub 64.
And I'm going to ask you, put you on the spot again.
That's the real.
Real.
The real's the most interesting. I mean, that was just, wow. Let's have a look at this. This is really real. Brilliant. Sorry for the pun.
No worries. On that note, Eddie, thank you very much for joining us.
Thank you.